Hello, my name is Steve Schwartz. I'm mentor and trade coach with RiosQuant. This is the RiosQuant Trading Technology Trend and Momentum Trading Workshop. Please read the disclosure statement. When trading commodities, foreign currencies, futures, know that there's risk. The purposes of this workshop is for educational purposes only, and past performance is not indicative of future results. So we're going to get right to it and talk to you about our methodology. The RiosQuant sequence is designed to stay objective. What does objective basically mean? It means straightforward, black or white, simple. What you see is what you get, that type of what objective means. Our success at RiosQuant lies in the ability to merge these complex ideas into working strategies that you, the individual, do not have to feel you have to in each day become an analyst with a complete top-down analysis and spend an hour or so preparing. How about less than 5 minutes, and then once you hit your screen, it's less than 30 seconds in identifying a setup that is either going to qualify or will be disqualified. So our sequence is designed to identify the market sentiment of the overall environment, assess current market conditions, whether there is a risk-on, risk-off market environment or sentiment. Once we know what the trading environment is, we then need to select a specific market. We are not exclusively an S&P, an E-mini trader, or an oil trader. A chart is a chart, as we say, and if you have the right tools, as long as you understand the leverage, the minimum fluctuations of the contracts, the risk that you're taking on any contracts, it won't matter what you trade. I do believe in the statement that I need to learn one thing really good, and we will help you do that, and we teach that wholeheartedly. So if you've come to us, and I'm going to ask a simple question as I continue, if you come to us as a single instrument trader, like you just stay with the E-mini, or you just stay with the oil, or you just stay with the gold, let me know. Put it right there in your chat box. Good morning, Santiago. And Santiago says Forex. Perfect. So trade Forex with our tools. YM. So trade the YM. But what I can tell you about anything that anybody needs to know, you don't know what you don't know. But I know that all of you know this. We all want to grow. So grow and know, or know and grow. Now, coincidentally, one of our alpha models or trade signals is called Gnostic. Does anybody know what GNOS is a root word for in another language? Anybody have a clue? Hi, Amber.
Hey guys, hey Steve.
Let me introduce you to Amber Little. She is our client relations support manager, and she will take care of any support needs that you have in trial if you decide to take trial. So why don't you introduce yourself, Amber?
Sure, happy to. That was sort of the the introduction there. So as Steve said, I'm the client relations manager, and whatever I can do to support your trial as well as membership. That's email invitations, coordinating question and answer sessions with Steve and the other coaches, along with coaching sessions. and then as Steve said, getting you set up for your trial, getting the indicators loaded on your machine. So happy to do it, and I'll put my contact information in there so you can reach out.
Thanks, Amber.
Sure.
Amber, in other words, is our point, your point person. On any support level, she is your point. She'll help direct you in where you need to be directed as a member, certainly for support, but also trial membership, or if you want to get a trial. But let's stay. I'm going to stay focused now. Thanks a lot, Amber. I asked the group, Amber, what they think, or if they know what GNOS is, because we were talking about knowing to grow, needing to grow as a trader. We're talking about single instrument trading, and we want people not to feel as though we're going to bombard them with currencies, gold, natural gas, foreign, let's say, stock indices, because there's basically 4 different asset classes. Learn one thing rather well, but learn it the right way. And there is a right way. It's called maintaining an objectivity, knowing that you don't have to be an analyst, mitigating fear by knowing what your position sizing should be before you put a trade on, understanding that the psychology of trading has 110% to do with risk, what risk you're taking. Anybody tells you anything else or wants to charge you $5,000 for a psychological, let's just say, conference, save the money. I just told you what it will help you mitigate or redirect your psychology and mitigate fear, because that's all trading is about, is of trying to avoid it. Albert says knowledge. Dina says knowing. Well, that's correct. Nos is to know, K-N-O-W in Greek. Perfect. Now, unfortunately, it's not Latin, it's Greek, but that's okay. You got it all. So know your trend. And also, you know the RQ channel, even though R doesn't stand for no, it stands for Rios. But our trade signals on a discretionary basis is Gnostic and RQ channel, but we're going to also show Einstein today. I'm going to touch on it because I used Einstein exclusively Thursday, and then Friday I did trades on my own, as well as using Einstein as a signal generator, but not letting it run on its own. So if you can stay objective, you're going to overcome fear. There's 3 things we have to face every single day. We wake up with greed. We want to make money. But how amped are you feeling? Are you trying to get back money that you lost the day before? Did you wake up feeling like a monster and you want to go after it? Are you position sized properly, creating fear, the second emotion, or mitigating it? You know, if you're over leveraged, subconsciously, whether you know it or not, you're going to be operating fear-based. And then thirdly, remorse. So there in itself, the sequence is designed to overcome over-amped in greed, over-leveraged next, creating fear, and then the third is remorse. Oh, I should have held on longer. I could have made more money. Oh, I needed to hold. I didn't need to move that stop because I got stopped out and then the market went up. I got to tell you something. We're all human. I will tell you now. If Joe is in the room, and I'm not sure he is, he told me a story that applied to him that I'm sharing with you because he's human. And he developed all this, and he uses it as a commodity trading advisor. He's a money manager. And toward the end of the day, I spoke to him, and he's feeling, I could tell, you know, he wasn't real upbeat. He wasn't really down, but I could tell something was off. Well, he was feeling a little remorse about something. Unimportant what it was, but he was feeling remorse. So what we're going to do is we're going to show you what it looks like to be a trend and momentum trader with algorithms that are predictive. They're crunching probabilities. They're not moving averages. They're not lagging indicators. They're trade signals that are going to define forward-looking levels, bullish zones from bearish zones, one time a day. Then what happens is you've got several different indicator packages that you can use, or you have what's called a leading indicator called Gnostic, which is going to help you find an early formation of a new trend. The RQ channel is a breakout or momentum indicator that appears, you overlay it and it shows you where the optimal point of a breakout is if, let's say, a trend has already started and maybe you missed the Gnostic early formation indicator, or they both match up at the same time, giving you double confirmation. And then the strategy, Einstein as we call it, because it's not an indicator, is flexible auto trading. It can either be used as a signal generator that you can run where it is not connected to your account, or if you're feeling safe and comfortable and relaxed and you want to take some stress off, mitigate the stress, so to speak, you can use it as an auto trader. And I've done both. So what we do first in that sequence is we want to know what the top of the top-down analysis is, what the quant rankings are on a daily basis. We have commentary. You need commentary. You need to know what the overnight London session brought us here in New York, or for that matter, Mats in Sweden will understand what's going on and have levels that are defining the bullish zones from the bearish zones right out of the box. We call it the RQ crossbox. What I'm going to do at this point is I'm going to show you, and then I'll show it to you in real time, what the RQ crossbox basically is doing when defining market environment or assessing market sentiment. It's one of the same. As I mentioned, we're multiple asset class traders, but if you're a Forex trader, you go straight to the Forex tab. But this crossbox is built out of component 1, giving you quant rankings of all the different instruments within each asset class. Component 2 gives you a quant ranking that rates the actual daily, let's just call it trading environment or sentiment, and it's neutral or bullish or bearish. You can see here's a pie of that day. This goes back to May 1st. We're going to show you real time what this is. So let's go and show you what this means. And then the third component is the hot list. So let's for a moment, and we'll come back to the slides to move on. But here's the website itself. Each one of the asset classes give you specific instruments that are the most, let's call it liquid instruments that you can day trade. Financials, metals, energy, grains, and Forex. Now, we're not going to shove grains down your throat to trade. But remember what we said earlier about knowing and growing. Our people are growing. Because once you get a handle on what you first do best, it will be exceedingly easy to select any one of the instruments within these 5 different asset classes. Component 1. Component 2, the quant ranking itself. Let's talk about that. Quant ranking, 0 to the number 3 or 0 to the number -3, is ranking neutral, and neutral tells you to position size your let's just say you are use an example. You're a euro, you love trading the euro US dollar. Right here, I just picked any one of these. There it is. There's a 1. It's yellow. I don't care if it's a -1, a +1, a +3, or a -3, because there's 7 variations of neutral, as I mentioned, from 0 to -3 or 0 to +3. If you see yellow, quant ranking, would it not be easy enough where if you're ordinarily trading 100,000 euro US dollar that you cut your leverage in half? Can I ask that question of anybody, whether you're a Forex trader or you're an E-mini trader? Here's the S&P. Quant ranking is a yellow 1. You do 4 lots. Is it easy enough to decide to do 2 lots instead of 4 lots? Yes? No? I'd like everybody to participate if you'd like to. Well, I know it's a rhetorical question because anybody would love to know how to best manage risk. Because that's the number one thing about trading, is managing the risk, right? Yes? Of course. We all want to manage the risk. We don't have a holy grail, but you see, institutional players and the hedge guys on Wall Street, they've got tools like this, where they're doing a sequence or a process that first tells them where the risk is and how much risk they should be taking, aggressive or light, on a whole variety of different variations, because they're managing multiple different asset classes at the same time. If you're just trading one asset class at a time, and you are trading, I saw KW trades the E-mini gold and oil. So the E-mini, you're trading light positioning. If you're doing, I don't know what this is, but I'm getting rid of it. Keep color scheme and don't show message again. Okay, so KW, who just joined us as a trial member, he trades ES, he trades gold, and he trades crude oil. ES, if you're doing 2 lots KW, you drop down to 1. If you're doing 1 lot in crude oil, 1 lot in gold, you go to 2. If you're doing energy and you're accustomed to trading a 1 lot, you go to a mini. Does that make sense to everybody? See, what this does is it will immediately, by knowing what your position sizing and leverage is according to the instrument you trade or instruments that you trade, it will immediately mitigate risk. And if you can, let me ask you this, is your rate of return directly correlated to the amount of money you're making? Or is it more important to know that your rate of return is correlated to the risk you're taking? Where is the real rate of return enhanced? And I can tell you where it's enhanced because anybody that's a professional trader will tell you it's on the risk side. So the less you lose, the higher your rate of return is on your winning when you combine your winning trades to it. That is a reality. Unfortunately, the newbie or people that are struggling, they think the rate of return, and it makes sense because of the greed element, they believe that, hey, more money I make, the higher my rate of return. The the less money you lose, the higher rate of return. Because if you can turn over 50% of your trades in profits, and you've got your risk controlled right, your leverage is controlled, your places of stops are pointing the right place, but most important, your position sizing, according to the trading in sentiment or market trading environment, is what it should be, you are going to improve your rate of return. And I'm speaking to the members, because if you're, Bruce, if you're here, you're doing very well. I'll be willing to bet you have disciplined yourself to that position sizing now. Everybody go along with that? Can everybody agree that position sizing is essential? Knowing in advance, of course. So now the next component, the third component, is the upside list from the downside list. Well, just because it's on the upside list, these instruments, doesn't mean that everything's going up for the day. We're not predicting that. What the algos are saying is that taking into consideration, this is daily data once again, taking into consideration the London session, including other algorithms of more data, it's made the upside list. And our members learn what the algorithms are or the formulas are once they join and they attend the IQ room with Joe, because he's the only one that's going to discuss that. But we have a list. It's called the upside list versus the downside list. So if on the upside list, these instruments are on the right side of our chart, meaning the buy side only of the chart, which we're going to get to now, you then have a higher odds of that instrument for continuation. If, let's say, the dollar yen is on the opposite side, it's on our sell side of the chart, but it made the upside list because the daily data is still telling you it's an upside candidate, yet the dollar yen is on our sell side of the chart, the intraday data, the micro data, you don't do the trade. It's an easy formula to understand. So in other words, in this first part of the sequence, you are disqualifying trades just as much as you are looking for the highest odds of qualifying trades. I hope, and if there are any questions, I'll stop here because we're now going to go back and get into what the levels are about, what Gnostic's about, what RQ Channel's about, and then we're going to go to my platform. Any questions about this? And if there are questions, Amber's going to read them so the whole group can hear it. So type away. I'm going to give it a break, one break for less than a minute. But any questions? So it's all good. You know what this tool does? It's the top of the top-down analysis we've learned to do, but it does it for you, meaning you got a ranking system from 0 to 3 or 0 to -3 that tells you to cut your leverage. Bring your position sizing down. If things are moving in the right direction and the quant ranking is green or red, like the Aussie, step on it. It's updated at 7 a.m. to 7:30 every morning. Joe Rios makes sure he checks the algorithms after he writes the quant report, and it's good throughout the 24 hours, Tim. I'm sorry, Amber, I answered that question before you read it. I'm sorry. I'll be a good boy. Any other questions? Go ahead.
Steve Santiago is asking, what's the benchmark?
Ah, the benchmark. It's what the institutions look at where they're going to put their money in or take their money out first. They're going to put it into the S&P, take it out of the treasuries, or take it out of the treasuries and put it in, take it out of the S&P 500 and put it in the treasuries. And the dollar will then be affected, or the dollar will be the leader, contingent on strength or weakness of the dollar. You might see the S&P moving in one direction when the 10-year notes are moving in another. I can tell you now, just as a bit of a fundamental tip, if yields are going up, the dollar will gain strength. If, let's say, there is a currency or economy that's going to raise rates earlier than we will, then that currency will rise up against the dollar. But that's not the case in most cases. Go ahead.
Sure, Steve. Tim is asking, is it always a long bias?
No. No, it's not always a long bias. Risk on, risk off. There's 4 basic institutional models. There's risk on, there's risk off, there's mixed, and there is conflict. 3 of those elements of market sentiment have to be that actually point to synchronization between the S&P 500 and the Treasury notes. If you want to learn more about that, Tim, take the trial. And you don't even have to buy the indicators. You're going to learn in the trial deeply what that means. But you got to take the trial. It's well worth it. Remember, you need to know to grow as a trader. Okay, so now we have that. We understand the benchmarks. Here's the 3 components of the market sentiment. We've got our multiple asset classes. We have a ranking that goes from 0 to 3 or 0 to -3, which is neutral, and everything above 3 or below 3. -3 is bearish or bullish. If you decide you want to just go to the trial, go to the website. There's a user's guide that, in fact, Amber will be more than happy to set you up with. But now it's time to go back to the slides. If I can find them. There it is. All righty. So let's get into the next step in that sequence. We know what the trading, we know how to find the trading environment, market sentiment, step 1. That's easy. All you got to do is pop RiosQuant up and know what your rankings are. And then second step, what's called the next stream. It is a velocity component that points to the market selection that you have the best candidate for momentum direction, the highest odds of continuation or acceleration. The next stream indicator, or it's called the RiosQuant, but the next stream component in RiosQuant has a velocity component designed to help you identify momentum strength amongst multiple markets. It means you can identify where the momentum strength is and where the money trail is leading. Wouldn't it be nice if you're an E-mini trader and it says, look, there's no momentum, don't trade it? Now, I don't mean the market, the E-mini going sideways in a static direction, because there can be momentum building and you don't know it. We know it. But wouldn't it be nice? Yes or no? I'm asking the whole group. Knowing when to disqualify a candidate, that is every bit what this tool does. Is it disqualifies a candidate as well as it points to where the momentum is and qualifies the candidate. Or for that matter, forget the candidate. It'll qualify or disqualify the one instrument that Graham, for instance, trades as a YM. Well, Graham's going to grow. Just joined us as a member. He trades the YM. I'll bet you dollars to donuts in 90 days to 6 months he's going to be trading other instruments. But he's in a serious and intensive learning process and curve. with our coaching, with all the workshops. KW, go ahead, Amber.
Sure. So KW is asking to know when something is trending.
Yeah, it's to know if something is trending. Good question. Good question.
And then Santiago is just making a statement that, yes, it's all very helpful to reduce, instead of having to analyze 20 different charts, it really helps to be able to hone in on it.
Yeah, we've been told that our members are getting rid of half the screens they owned. They just don't need all the real estate to see all the different charts, because there's the RiosQuant, which is this next stream, that points you in the right direction where the money is trailing to, where it's circulating to, circulating to. Let me get into the KW question. To know when something is trending. The only time, and that's why these lagging indicators don't work anymore. The only time you know something is trending is when it's trending, right, KW? But wouldn't it be nice to let you know when it's not trending, but there is aggressive accumulation or aggressive distribution, aggressive buying versus aggressive selling, when the market is in a sideways channel, and you will see evidence of that today. This is where we have an edge. And that it's important, guys, to learn it, because the patterns that you're going to see in real time, or not really moving because it's Saturday, but you're going to come onto my platform. Here is RiosQuant with NextStream. NextStream is a multiple hour setting that's broken into 24 individual pockets of time, where time is rolling in and out of those pockets of time, measuring price velocity, or measuring the rate of change. You know, momentum, one of the definitions in Webster's and momentum is the degree of speed, the strength of speed, if I recall it correctly, or the strength of speed and motion. Well, just think of this tool as a tool that measures. It's got algorithms measuring the rate of change through 24 individual pockets of time. These are the these are your 3 segments of time, 1 hour, 3 hour, and 8 hour. And you might see in your newspaper a cute little quiz. Well, 24 pockets of time is broken into what through 3 segments? Well, that's easy. 1 hour is broken into 30-minute segments. 3 hours are broken into 6-minute segments. 8 hours broken into 16 segments. So 2, 6, and 16 individual segments of time, 30-minute data points, will end up with 24 segments of time. And at the same time that time is rolling in and out dynamically through those 30-minute periods of time, it's measuring price action. And that is where it will develop either a positive rate of change or a negative rate of change. Take a look. The 1 hour here in the notes was a negative rate of change, but the 3 hour was a positive rate of change, only to see the 8 hour in a negative rate of change. Now, knowing what you know about momentum and this measuring, would anybody dare go long or short the notes? Think about it. Yes? No? You don't have momentum or positive rate of change or the strength of motion moving in the same direction, in simple terms. So, remember what I told you? We have a tool that will disqualify a trade. Here it is. It's not all red. It's not all bearish momentum. There's measurements within the algos that are telling you that the momentum is mixed, as well as there are algos that are telling you that the NASDAQ and the ES are all bullish. So where are you looking first, Graham? You looking to the YM, or are you looking to the NASDAQ, Graham? Here's a test. This is a spot quiz for you, Graham. Are you selecting the NASDAQ or the YM? He's selecting the ES, of course. Graham, you're selecting the NASDAQ. Why? Because you have the strongest rate of motion or velocity in the NASDAQ. ES is a close second, but you're looking at the NASDAQ first, aren't you? So you're looking for the strongest of the strong or the weakest of the weak. Look at the euro. As weak as this number is, well, let's just say 6J, because this is an anomaly. Let's just say the 6J. It's minus 9.9, excuse me, minus 0.923. The 1 hour is minus, but the 3 hour is plus. This is not good force, speed and force of motion, rate of change. In fact, you can see that there isn't a currency to speak of, with the exception of euro yen in this example, that showed any real bullish accumulation, because it's all green. It's the only instrument that was all green. So if you're a currency trader, Santiago, you're looking at the euro yen first, aren't you? You understand that concept? Perfect. It doesn't mean that you run off and go trade it, but this is where you look first. So you see, what this tool does, I like to call it the Sherlock Holmes indicator, but Joe won't let me do that. What it does is it gives you the process of elimination and deduction, just like Sherlock. I like the show Elementary. It's the process of elimination. Will that not help you avoid risk, identify risk, and help you with rate of return, as I mentioned earlier? Does that make sense to the group? Don't be afraid to answer yes and no if you think it's good, because I certainly would like to know who's engaging. This is a tool that will keep you out of trouble as much as it will to identify the right foreign currency if you're a foreign currency trader, the right crude oil, right? Identify crude oil as a good candidate. It could be all green or all red. It doesn't matter. Take a look at natural gas, all bearish. So,
Steve, we have a few questions coming through.
Good enough.
Okay. Santiago is asking, does it help you to identify trend change? And then KW is asking, where is the tool located?
I'm not sure I understand the question, where is the tool located? I think
meaning where is the RiosQuant itself? Is it on a website? Is it
Ninja? The RiosQuant, KW, you have RiosQuant in your Ninja platform. Didn't I build you, didn't we get together, KW, to build the oh, you have TradeStation. It's in your radar.
Steve, we also have Tim asking about the time frame. What time frame is covered here?
Oh, yeah. Okay. Once again, this is in real time. The rates of change in real time. Every fluctuation is going to be measured by the algorithms. And through time, these are 30-minute pockets of time. These are your segments. But each segment is broken into two 30-minute data points, six 30-minute data points, 16 30-minute data points, and it's dynamic. So this isn't measuring a 5-minute, like a 5-minute candle or variable. It is real time, and every fluctuation gets measured. Does that answer your question, Tim? No, it's not updated every 30 minutes. I'll answer the question. Tim asked the question, so every 30 minutes is it updated? It's updated every moment that there is a fluctuation. Whenever there is a minimum price fluctuation, these percentages change. This is real-time data. Okay? Go ahead and ask Graham's question, and then we're going to move on. And then we'll accept questions a little later on.
Sure. Graham is asking, or actually kind of making the statement that perhaps the RQ template is in the files that Joe would have sent him for TradeStation. This is
yes, it is.
KW.
Yes, it is, and it goes into. Oh, he's speaking to KW. Yes, the files come to you, and then they load into the template, the radar template. Okay, we're going to get to trend change. Let's move on. All right. First, understand the two trade signals. The one is one indicator is called the RQ channel right here. It's a breakout indicator. It's price action breaking above a specific point, and in this case, the cayenne blue is measuring a price point where if price moves out above, there is a high level of continuation coming, probability of it coming. There won't be any guarantees. These are predictive. Price action went down, as you can see, in these last three candles or bars. But the RQ channel momentum indicator went up. And then price action, it opened here, we went up, and price action blew right through it. The other indicator, the Gnostic indicator, know your tick, is located or found with the numeric 5, 3, 1 accelerators. In other words, we're waiting for a 5 to buy on the bullish zone, and we're going to get into that now. And then we're going to get back to the 5, 3, and 1. So what happens here, guys, is this. On the genesis of all of this is that we have levels. And the levels change at midnight each night once. And they predict or they point forward. What they're doing is predicting the critical outer reaches of support or outer reaches of resistance. The double green lines are referred to as the bullish NOS level, or just call it the bullish level, and the bearish NOS level. Okay, time to come to my chart. Let's get into this first. Here is a tutorial on these levels. First, they're dynamic. Take a look. The change at midnight, they only change once. Take a look at what happened to these levels at midnight the 21st. Remember, we're going to cover the 21st and 22nd of this week, Thursday and Friday, on my trading. All price action above the upper green line, starting here at midnight, and they change, and they're dynamic. Each one of these levels will change on their own. You can see that the resistance level went up to a certain degree. It went up from 1798 3/4 to 801 1/2. Look how far this declined from 75.50 down to 62. So you're not seeing a uniform up and down of these levels, and everything drops. In each one of these 8 lines are independent, to put it in simple language. These levels change at once at midnight, as I mentioned. The upper green line is the buy side only of the chart. It's the bullish region of the chart. You were only buying on the buy side only. Let me make sure everybody understands that. I don't mean to treat people like children. I promise you. Remember what we said earlier. This is objective. So it's made to be simple. These levels are simple levels and they're not pivot points for those that are thinking it. All price action below the lower green line is the bearish region of the chart. So now, the buy side only, right, defined by the upper green line, is the bullish region of the chart, right here. From the demarcation of the bullish region all the way to the final resistance, which we call the final target. These double yellow lines, I'm sure you guys have already figured it out, that it's resistance 1A and then there is resistance 1B. This, if we're buying here, we're looking for fives. Remember I mentioned fives? That's the Gnostic trade. We're using first resistance as a target. The second level of resistance and everything in between is called the neutral zone. It's where chaos, undetermined price action might take place. These are high-frequency algos that are predictive. They don't change during the course of the day. So what you get, what you see is what you get. Now I ask you, price action started, the levels came down, resistance went up, but everything else went down. Support levels went down, the bullish and bearish NOS levels went down, support levels, these were the resistance levels that went down, the support levels went down, the critical support went down. When they went down, price action was still going sideways, but it was on the sell side of the chart, right? Right here. But something changed, and I know that Santiago's asking about trend change. Yeah, there's trend change. The trend change takes place where you have the highest probability that price is going to move, has moved to the upside or of the bullish level with a 5. The 5 has to show up as a leading indicator that there is change coming. Now that doesn't mean once you see a 5 you go straight here. But what it means is if you start seeing a bundling of those 5s, like you're seeing here, not consolidation, but an accumulation of 5s. You know what accumulation means. It means buying. That's accumulation. Well, that's why 5s, being that it has the highest quality of price action in that given 5-minute chart, when you start seeing a bundling of 5s, it's telling you there is a buildup of a high probability of a trend change from where it came from, which was a sideways band off of the declines the day before. Now price action, as we understand it, will change, especially if there's support. And there was a little mini double bottom, as we would all see right here. And right here. We call that a double bottom. This is the neckline. You can do all kinds of stuff that you already know. Double bottom. Ah, I see a little bit of a thing here. Now we're moving towards those highs. Well, here are your levels. And these levels, they are looking back a minimum of 2 days. So this is just a small, minute part of this dynamic level change. But look what's going on with price action. Double low. But now look what happens when it starts taking out these Gnostic levels that have nothing to do with this pattern. The algorithms are based on daily data. It doesn't have anything to do with the 5-minute from, I don't know, 2 o'clock, 2:15 on. But these levels drop, and coincidentally, it became the neckline of this pattern. Well, if anybody can figure that out for me, I really would like to know. So now you have price action probing the bullish side of the chart, and a 5 appears. Right there. This is the benchmark, S&P. It's telling you that institutions are accumulating, not in uncertain terms, not in certain terms, but most certainly the 5 is telling you that there is high price quality defining accumulation and building a high probability of a bull trend. Go ahead, Amber.
Sure, Steve. Sorry, I stepped away for a moment, so I'm not sure if you answered these already, but KW is asking what would keep you from going short at 3:30 in the morning on the red 5?
Oh, good question. If maybe I would, but the risk-reward ratio has to be 2 to 1 or better, and we happen to have, Joe thought of everything. If the risk-reward, if this 5 right here is 2 to 1 or better, meaning you've got for every risk, every dollar risk, you're making $2 projected, take it. There's a 2.24. If you take it, you're getting stopped out. Just like that, and you're reversing. That answer the question? If that 2 to 1,
and then Tim is asking on the same.
Go ahead.
Sorry, I didn't interrupt. And then Tim was asking about the 5s that happened beforehand. Is there anything prior to that would have made you consider it?
Going short.
Mm-hmm.
It's the same answer to the previous question. If that 5 is 2 to 1 or better, you take it. It's almost 1 to 1.
Sorry, Tim is saying that's actually not what he meant. Tim, what did you mean? And while we're waiting for Tim, Santiago, their relevance is what he says. I'm not sure what that means, Steve.
I'm not sure either.
Okay. And then Santiago is asking or saying, when you have a red 5 but it's moving up, is that some sort of a sign?
Well, yeah. If you're starting to put in a low, let me make something. Let me try to help all of you, and I'm speaking to the members now, directly to the members, and I want you to pick it up. Those of you that haven't, that are in trial, or you're brand new to us. This is not this is not a black box. You have to use, let me ask the question, who here feels they have a strong understanding of support and resistance while I explain this? This low was established on the 20th. Price action went sideways and into London early. The low was established in London, testing that low, and it held. That's support. So if you've got 2 lows that are showing up as support, the duration of this pattern is long enough to say that's a pretty strong pattern. The longer the duration, the stronger the pattern, and the more robust the breakout if it does. So you have 2 lows. This low stopped here, then went up. See this 3? That's extreme. That's oversold. The 5 is good price action, but the 3 is extreme. The 1 is exhaustion. So when you start seeing 3s matching up with a previous low or at a support level, let's say a yellow line, but in this case, the 3 here matching up a previous low, and then you start seeing a bundling of 5s. You're seeing more 5s than red 5s, aren't you? I'm saying you're seeing more yellow 1s than 5s, aren't you? That is a sign of exhaustion, that the price at very least is going to come up. There's an imminent bounce coming. Doesn't mean there's going to be a reversal. The only time we can build a confidence or an expectation of a reversal is when we go to the buy side of the chart, right? Remember, we can't do anything until we see green 5s that are generated when the price action is closing above the upper green line. So now let's take a look at this 5, the green 5. So maybe you shorted this, and I'm talking to Tim. Maybe you went short because it did qualify. Now that you know what you know about 3s and yellow 1s, likely you might not take that 5 even though it does qualify. So there again, there is indicators that'll tell you to stay away from it, but there's a 2 to 1 right here. 2 1/4 to 1 after a bunch of 1s that say exhaustion. Well, if you take that, you may get stopped out, but I highly recommend once you start seeing these bundlings, you get long. Now look at the risk reward here on that 5. That's 2.69 or almost 2 3/4. That's 2 points risked, $100, and I'm using round numbers. Please pay me your indulgence. For $275 to be gained. That's not bad. 100 to risk against 275 to gain, and I'm using round numbers again. But once you start seeing the bundling of 5s on the green 5s on the buy side of the chart, that's telling you. Now watch what happens. Now that we know that, if we get in, if we go short here, that's the target. If we go long here, there's your target. These resistance levels are not designed to go short against. You're only a buyer on the buy side of the chart. Now, let's look at the other side. Here are the notes, the other benchmark. London, here's a 5. Remember, right here is the bearish region of the chart. It's the sell side only of the chart. No buy-in down here from here down. Only shorting. Here's London, and there's a red 5. What is that saying? Risk reward. Now you may not be treasury traders, but I'm just using it because they show up as good examples. That's 3 to 1. That's a lot of risk though. No, actually it's like 3 points risk. It's about $100. It's actually 1.5 points. 1.5, 30 seconds. Look at that. This is a support level that got established at midnight. Got a leading indicator of a 5 just at the top of the bearish region of the chart. Trended and stopped right on support 1A. All the while keeping in mind that these levels have nothing to do with the ES. They moved on their own, yet price action stopped at support 1A, which was target 1. And this was generated 10 hours in advance. That's what we mean by these algorithms crunching probabilities that are predictive. Now it's 2 o'clock. Nobody's going to trade notes back here. Let's see if any one of these 5s, let's say you weren't up in London, and you're really more here, you're a New York trader. And then I'm going to start showing some examples. I'll slide this over. Let's look at our ruler. There's a 5. No, 1.66 to 1. No cigar. It doesn't qualify. It's not 2 to 1 or better. We fade it. We don't get involved in it. As painful as it might be watching it go down, there's other things to look for. But at this juncture, at 2 o'clock, you're not doing treasuries. Okay. Now, that's your tutorial. That's Gnostic. To review, we have a sell side only of the chart. We have a buy side only of the chart. We've got our targets 1. That's your final target way up here. If it makes it there, God bless. But it certainly doesn't predict it. What it will predict is that there will be a stalling out, or at least price action. Once it approaches 1A and 1B, it's going to stall because that's significant resistance levels that were already generated way back in time, 10 to 12 hours in advance. All righty. Now, the other indicator, RQ channel. This is a breakout indicator. Let's say for a moment we miss this 5. It's 5:30 in the morning. Forget it. But here's that 5. Same chart. And we miss that 5. Or we're up and we see this RQ channel, the momentum indicator, drop, go forward, and you see a 5. Let's see if that qualifies, 2 to 1 or better. It's got to be, or we don't do it. There's let's just say 2.5 to 1 again. You already looked at that. But now you have this RQ channel that's sitting there as well. Now you're getting double confirmation that A, the price quality is the best it could be in that 5-minute chart. That's what that 5 does. It blasts through the RQ channel with an extreme price action. We don't worry about 3s when they're appearing at the bottom of the bullish region. We don't let that spook us. We get in right there. We missed it. There's one last chance, and that's this RQ channel where it blows right through it. Look at this 3. And then it comes down. The stop is placed right here under the bearish Gnostic level. Right here. Let's say you didn't take this trade. Right here, it qualified. And you could have gotten in, but you needed to put the stop down here, underneath the bearish Gnostic level. Putting together what you already know about support resistance. If this is a breakout indicator, this is resistance. This is another algorithm pointing another resistance, optimal point that if broken through, resistance has been broken. Same thing here. Same thing with the bearish. If it breaks below the bearish level, you've got a higher level degree of continuation. But in both cases, take a look. You've got the break, the support here and here. This is the longer term bullish NOS level. This is a shorter term predictive level. And Amber, I know there's a question.
Sure, Steve. Okay. The data box in TradeStation, can you make a comment to where that is?
No, I think if he would be kind enough to email Ken.
Mm-hmm. Sure, I'll put Ken's information right here in the chat box.
Yeah, please do.
Excuse me. And then Tim is asking, what type of chart do you place your entries on?
We put the entries right on the chart. I'll show that to you. In Ninja, you have what's called a chart trader, where you can actually place a chart, and I'll show that to you. In terms of the type of order, with this, it's a resting order, Tim, where you're using a pending order on the breakout. Remember, the channel line dropped. Here was a 5 that showed up as a leading indicator that the trend has a probability of starting to form or evolve. But then the price action, you don't want to wait and start chasing. So what you're seeing here is a bundling of 5s. It's what we teach. It's a pattern of behavior we teach to look for, to build an expectation. And then when you see this come down much closer to the market, you put in a buy stop right above that RQ channel by a couple ticks, maybe a quarter of a point.
Tim is actually clarifying too that he also meant the timing. Like, what is it, a 5-minute chart?
Oh, good
chart?
Yeah, good question. We use 30 minutes, we use 5 minutes, and when people get their legs underneath them more advanced, are using 2 minutes, which I'll show you. So RQ channel breakout momentum is a momentum indicator. Easy. You just have a resting pending order letting the market come to you push you into the market or pull you into a market. You then put your stop, once you're filled, you put your stop right underneath the bearish NOS level. So in this case, there would have been roughly, and I'll just do this real quick, you would have been filled at 83 with a stop of 81.5. So 1.5 points or $75. And you would have, initially we teach people to go after the first wave up. So filled at 83, get out right at the midpoint of this zone, zone 1.
Now, Steve, KW is asking, when the channels squeeze or expand, is that a signal as well?
When the channels squeeze, meaning they coil, that is definitely a sign. If anybody knows what coils are nothing more than pennants or something where price action is starting to get tighter and tighter. It's called a coil in formal language. Yes, when you start seeing these start coiling, you know there is going to be significant volatility coming. But the problem is we don't know which way. I'm not going to promise that to anybody. But the market showed all these fives being accumulated, so the odds were being built that we were moving higher. And this is where I'm going to move on. But just understand this, guys. This whole three-step sequence is an odds-driven system. Step 1, step 2, step 3, if everything lines up, your odds are the greatest for price action to either reverse into a trend and evolve, or they've already reversed and evolved and will continue on a momentum break. The one rule is this. I pointed to this, and then we move on. If in fact in this zone, bullish zone 1, price action of that RQ channel, it's right on it, is above, like up here, above the 50 ratio in the zone, too much risk, we don't do it, it disqualifies the trade. No trade on a discretionary trade, meaning you're doing it on your own. That happened to be right on it. So that allowed you the freedom to do a trade with the stop here. So what you're doing is if you get in here and your stop is here, you're just trailing your stops. Does that make sense to everybody? Before I move on, because now we're going to my charts. I mean to my trades. Make sense? First Thursday, let me say this. If there's any questions, Amber will let me know. Thursday, I decided that I didn't have the time because I had a lot of coaching sessions and it was on Gnostic, RQ channel. It was in the early stages. I activated some Einstein. I got up early. Here is where I woke up. This is why I marked this 5 o'clock. I got up at 5. And I look back because every good trader needs to know what the overall pattern preceding what you're looking to do is crucial, right? Yes or no? And don't be shy. I really appreciate, Tim, your engagement and your participation. But guys, all of you, Tim, Shlomo, Tom, Tony, isn't it important to look back in time and know what the pattern of behavior is? Oh, there's Chris. Good to see you, Chris. I know that you requested a trial. Thank you. Dave, come on, there's more of you. You've got to look at the preceding price action to recognize, well, what you tell me, we all know what the what do you call it is? The definition of futures. It's the behavior of price action and how future price behavior will be. It's looking back in history and determining what the future can bring. In other words, what's the pattern of behavior preceding what you're looking at right now? Well, take a look at what's going on here. Right in here, there's sideways price action between 3:30 in London. I'm not up. I got up here. But I look back, and I didn't have time to put on a trade, nor did I want to. My goal, I knew I was doing a session today. My goal was to use Einstein and show people how it works. So I picked out oil. Why? Because oil was on the upside list that day. And you had an accumulation of oil. Okay? It was sitting in the middle. I didn't have a clue which one way or another. The quant ranking was bearish on the daily data, but it was on an upside list. And I went and looked at it. And I said, okay, I like it. I'm going to turn Einstein on. And I did it right in here. And I forgot about it. When I say forgot about it, I've moved on with my business and just let things go. Einstein gets filled. It took the RQ channel levels out. Well, how about that? 70% of Einstein is the RQ channel algorithm. The other 30% has other elements involved. And the logic of Einstein, the auto trading, follows the same logic. Buy side only of the chart from the sell side only of the chart. There's no confusion. So I turned Einstein on. Basically, being up early, there was natural gas. This was Thursday. There was a natural gas report. Well, price action, see, early here, I was already now up and going at it, and I open up, I'm a moderator of the trading room, so I was kind of preparing my, myself, and I think, Graham, weren't we in some kind of a session? I think so. I don't remember anymore, but I saw price action of these fives take place. The red 5 was of interest, but I really wasn't interested. The natural gas didn't really, I didn't like it. Things were moving up. It bounced. I didn't want to take it and hope that we were going to return back short. I saw these fives. Now price action's crossing to the buy side of the chart. Very easy. And I missed it. I missed the Gnostic trade. But I had the Einstein. So I didn't have to think. It mitigated stress. I turned on Einstein right here. Einstein finally gets filled here. Now remember, only 70% of Einstein uses the RQ channel. You would think maybe Einstein would take this. It didn't. It took it up here. Einstein was turned on right back here. Caught it, and it was before the natural gas storage report. Now Einstein, as I said, is totally flexible. I established it at 6 a.m. right here. I'm sorry, I did not establish it here, now that I recall. It was established early. And I was uncertain whether it was going to go up or down. But as we started turning up, I missed the Gnostic. It finally got filled here. And I let it go. And I decided, okay, what do I do about the report? Well, I left the report. I closed Einstein. I was not going to face the storage report that took place here. This just took the thinking out of it. I was a little ticked off. I missed the 5 here. Okay, I put Einstein on. I had made my decision to put the Einstein on at 6 a.m. That's where that was put. That's here, and that's here. It should have been the other way around. And I was ticked off. I almost turned Einstein off when I turned this on and said, I want to get long here. But I made my decision. I wanted to use Einstein for today's session. There was the 5, though. It helped knowing that there was a early formation, and it kicked into gear. That was numero uno one. I turned on at about the same time. This was 6 a.m. Before that, it was crude oil. That I went on, started my day right here. I loved the idea that price action, because I wasn't in London, I loved the idea that price action started cruising through and started moving, okay, up to the buy side, and there was the 5 again, but I knew I was doing Einstein. I didn't even know if that 5 qualified. Yeah, it did. 3 to 1. And again, I said, oh, well, that's an Einstein day. It's okay. But that 3 to 1, that 3 to 2, I'm sorry, the 3.2 to 1, that was $126 risk on crude oil versus a $400 gain. Well, so be it. It's an Einstein day. I activated Einstein at 5. I was up right at 4:30. I was too much asleep. I knew I was doing Einstein, so I wanted to get myself going. I had a sideways price action. These are the patterns we look for, guys. All of us should know. Look for sideways congestion right around the middle part of the zone, the chart. You put Einstein on. You can set it for whatever time you want to take the last trade. You can set it for the amount of profit, risk versus reward. That's the $200 profit versus $200 reward. Einstein took it, which was the RQ channel. And I felt good about it. I saw this get filled, and I felt good about seeing these 5 show up. I knew I was taking $200 risk. More 5s show up. Okay, some 3s show up, but remember what I told you about 3s appearing at the bottom of the bullish zone. And then we started moving higher. Thank you, Einstein. Set a $200 profit, filled. Look what I did. I kept it on. This is where my setting was on this trade. I wanted Einstein, if there was going to be another trade, I wanted Einstein to have the freedom to get long a trade or short a trade up until 11 o'clock, and after 11 o'clock, no new trades. Look at this. At 8:15, breaks. The one thing about Einstein is this. It ignores the resistance, the double resistance bands or the double support bands. It'll move on its own. This is the one thing that this is where, if you're using them as targets, there's a motion involved. With Einstein, if you keep it on, you can take it off if you want. If you say, well, I don't like it, you can close it down. I wanted to keep it on. I opened up the lab. I'm a moderator in the lab, and I knew it was on, and I just moved on. This was not something that I even pointed out in the trade lab. Blew right through support 1A and 1B, then paused, then took the next trade. It was trending. And the one thing I liked about this setting, 5 to 11, is this. If it was going to continue to go down because, oil's been bearish, let it continue to go down. But, after 30 years, you start thinking, price action's at 93 and a half, 93 change. Maybe there's going to be some short covering. Maybe there's just simply going to be a reversal. So I gave it enough time from 5 to 11 to see. And this was one of my best days I've had in Einstein, the very best. And here was the last trade at 10:30. This is 2, 4, 6, $800. $200 profit, $200 risk. And if you want to see it, here is, and I'll just kind of open up the settings. Here are your settings. Profit target, stop loss target. 5 a.m., 11 a.m. The very next one, because things were moving risk on, the trading environment was perfect, was the GBP Aussie dollar. Sideways again. See that? I was up, as you know, sideways again. Okay, and it's in the bullish region of the chart, up near the support bands, resistance bands. Okay, I want to do a currency trade because I can manage it. Breaks out, Einstein gets filled, I'm out, I'm done. And that was it. Now, Friday comes. We're probably going to run 10 minutes late, so if you're getting bored, okay. But hopefully I've piqued somebody's interest. So far, Amber, so good. Not everybody's left. In fact, 90% of the people are still there, and thank you very much. I appreciate it. All right, let's go to Friday. I have another workspace that's going to show you, okay, Friday. Now, it's just reversed. It says Einstein, but I use this. Here's my RiosQuant. I'm showing momentum. I start my day off with gold. I lose. Perfect buy setup. This is me. Lose. I chased, and I paid for it dearly. Lost 170. That's how I started my day. Now what I did was, instead of using Einstein as an auto trade, I used it as a signal, keeping an eye on the RQ channel, on the NASDAQ. Why? Because S&P was growing. I used a 2-minute chart in this case. I got filled on the 2-minute chart. This was done manually, but using Einstein, okay, as an RQ channel signal, and I caught it. Took a while, but I caught it. And look where price action stopped, right at resistance 1A. I was happy as a lark. It took it again. Now this is a 150 versus 150. That was a reminder of mine. This was not auto, but I had the stops underneath. Buys it again after the pullback. Look at how it comes out right here, pulls back. I'm out. Doesn't go short because it's on the buy side of the chart. See? Broke the arc. Goes back long. Stops at resistance 1B. These were done manually. I got in. We were already at. We had hit what's called the 75 ratio. Take a look. See that 75 ratio right here? I manually came out at the 75. The target was placed there. The 150 was there. I checked the settings and see where that 150 showed up. It was right at the 75 ratio. Then it signaled it again, and I was a little bit trepid. I really didn't want to do it, but I said, you know what, I'm going to do it. And whatever happens, it could have easily rolled back down, but the S&P looked good. The benchmark was in good shape, and we came out. Go ahead.
Steve, excuse me, could you go ahead and speak to the NOS R3 at the bottom? KW is asking what that is.
Yes. The R3 at the bottom is the risk-reward ratio I've been showing you in the data box. It's nothing more than a histogram telling you the same data in the data box. I don't really use it. Thank you for showing it, but I want to just get rid of it. And I hide it because I'd rather just, I'm in the habit of going, if I'm looking for a gnostic trade, I'm looking at fives, I want to go to the data box and see it this way with all the rest of the data. Nina, have a good, Santiago, have a good weekend. You and I we'll create the coaching session, right? Okay, so notes. I trade treasuries every so often. Here's an RQ channel trade with 150. I've learned I don't go big, ambitious, and I'm using 2-minute charts. Remember, I mentioned 2-minute charts are more advanced, and I caught it. Look where it caught the 150. This took no more than 60 seconds to say, okay, I'm seeing the Einstein or the RQ channel here, price actions down here. I'm thinking Einstein's either going to give me the signal or not. Okay, where's what do I really want out of it? I looked at the price target up here, and it was just a little bit more than 150 bucks. I created a $150 target. Einstein helped me with that algorithm, and it signaled me. I went along on my own. So a loss of 150, a gain of a couple here. That's 300 here. A loss of 150 here. I'm up 150. I gained another 150 here. So now I'm back to 300 and the euro yen right here. This was later in the day. I closed the trade lab right here at 11 o'clock. And I used this breakout right here, guys. I used a Gnostic trade. See that 5 right here? It broke the RQ channel. See this 5? And then another 5? Thank you very much. High price quality. And I went for the 15 pips and I got it. So what you have is a lot of flexibility. In other words, what you've seen here has either created a different perspective on how to trade, but let me make it clear. If you understand support and resistance, that's all this is about. It's breaking above resistance or holding or accumulating around support. But you have algorithms that are telling you where the highest probability is, not indicators that are like looking in a rearview mirror. So now, we'll go back to the slides, give you an idea. Whoa, sorry about that. We will go back. You'll have to be patient with me, folks. There you go. So do you see objectivity? I'm going to ask all of you, before you take off, you skate, hopefully you're going to want to take a trial for those of you that are new. Those of you that are members, I hope I've gained clarity. Usually newer members are coming in for the redundancy. Are there any questions? Did I help in determining for you, or helping you to determine whether this is objective? It's straightforward. You know you're a buyer or a seller. You know Einstein does the same. Einstein mitigates some of the risk, not the risk, sorry, the fear. It takes mitigates the stress. So for the next 2 weeks, you can gain some GNOS, G-N-O-S, or knowledge. Learn new approaches to systems trading. Test it and experience it for yourself during the live markets in real time. You're going to be the judge in evaluating whether RiosQuant Technology is good for you. It's really important that you know that about yourself, that if you feel you are struggling or you need something, fine. If you're advanced, but you're looking for an additional filter that may give you the edge, I think the edge is in the RiosQuant at very least, because that RiosQuant is going to help you avoid some trades just by knowing what the momentum looks like in a far different manner. And there's 3 basic steps that Amber is going to help you with. She'll help you with the installation with tech support, okay? We'll help you walk through the installation, making the process quick and trouble-free. Amber, why don't you continue? Tell people about it. What happens next if they're interested in a trial?
Sure, absolutely. So as Steve said, I'll be the one to go ahead and help you to set up your indicators. If you already use NinjaTrader, it's super simple. We just come on and, in fact, I can send you the indicators with some basic instructions to import them. If you don't, it's not a problem. We just set you up with NinjaTrader, which is free to use and simulated in simulated mode, and import the indicators and even get you a data feed to go along with your trial. So that way there's no upfront expense to you at all, and we help you to connect all the pieces. Once you're set up, we go ahead and set you up with coaching. Your first coaching session is with Steve. He will take you through the methodology and through the basics of Ninja. And then between Steve and Ken Erickson, they will be available for different types of topics and coaching sessions for you, as well as just question and answer sessions. So for everyone, it's slightly different. It's customized to your skill level. It's customized to what you hope to accomplish out of the trial. And we're all traders, so it's a very collaborative way of reviewing the software to see whether the RiosQuant approach is for you. Did I miss anything, Steve?
No, that was great. That says it all. I guess the only question. Yeah, go ahead.
I was just going to say, and I did put our contact information again in the chat box, as well as the link to sign up for the trial. And when you go to sign up, just put in the comments area, that you want to make an appointment to set up, or what's available for you even this weekend. I have some time that I can dedicate. So definitely, let us know how we can help get you started.
That's great, Amber. Thanks. I just want to thank all of you. All I can say is this. If you are interested in a straightforward manner of trading that has a package of indicators that truly create objectivity in a manner that I think is going to be quite adaptable to the most advanced. We have advanced traders that bottom line is that they add whatever indicator packages they notice they could use. Or are you struggling? And if you're struggling, we want to talk to you about how we can help you grow, as I mentioned earlier. So it really is a matter of us putting our strongest effort in. But the one thing that I want to close up with, two things. If you're a NinjaTrader user, all you have to do is send Amber or fill out the link that Amber put in there, which is requesting info on trading systems. It's basically requesting the demo. Put your machine ID number in the comment section or email Amber directly. One thing, we will not boast a winning percentage or a losing percentage of anything, or a winning percentage where if only you join us you'll be 86% or 90% accurate. It's just not to be. It's not going to happen. We don't go there. But what we can do is boast the accuracy of the levels, boast the accuracy of our Q channel, boast the fact that if you let us teach you and you are willing to work it, it will work for you. It will help you get more objective, mitigating some of those emotions that all of us are affected by. And that's all that we can promise. So if there are any NinjaTrader users, send it. If you're a TradeStation user, just email Amber. She'll direct you to Ken Erickson, who takes care of trial requests through as well as NinjaTrader requests, but Ken takes care of TradeStation inquiries, people with TradeStation with inquiries. So if there's any questions now, you've got a chance to fly it by me. We still have more than 2/3 of the people in the room. So I want to thank all of you for hanging in there. We're running a little bit behind. I hope that you feel it has been helpful. And if there are any other questions, I'll hang back for another 5 or 10 minutes if need be. Well, there is a comment by Chris, and I want to thank you, Chris. He says, interesting stuff and looks like it's well worth looking at further. It's our pleasure, Chris. We hope that you will enjoy the trial. You're welcome, guys. Thanks very much for your coming in. Members are thanking me, and those of you that are not members or in trial members, there is for people that are looking for Einstein, members, if you don't have Einstein, there's going to be a Thanksgiving incentive. We want to give thanks to anybody. If you are in trial, you're going to be eligible for a Thanksgiving incentive. You'll learn more through an email. Monday night, I'm doing another session, another workshop that's going to be different than this, and you'll learn more about that incentive. Graham makes a comment, is it going to be free? I told you, Graham, I used to be Santa Claus in the 3rd grade. Amber, I'll read Albert Liam's comment, I'm not sure. Thanks. I'm not qualified to make useful comments on the soundness of your methods for reasons that I cannot explain, personality, mood, etc. It's not for me, but I'm glad to see and have seen it. Well, thank you very much for your comments. Now, if that means you're not qualified, meaning you're an early stage trader, then I completely understand and you would learn it. Ron asks the question. Do you want to answer that, Amber? Oh, I guess Amber has left. I guess maybe she's already gotten some inquiries. Okay. Ron asked the question, can you explain the different types of membership? Yeah, there are multiple levels of membership. There's a membership that is just for our trading room. And we're going to be mentioned, I will tell you, if anybody reads Futures Truth, we're one of 13 trading rooms of 460 or thereabouts that have been selected as transparent, accurate, real, win or lose, without the snake in oil. Everybody's going to see that article one day. I just can't send it premature before it's published. In terms of it's not Futures Magazine, it's going to be in Futures Truth. Ron asked, can you explain the different memberships? The Trade Lab, there is a quarterly and annual Trade Lab membership. I'll be more than happy to discuss this because pricing, there's going to be, an incentive being announced, and I have yet to publish it, so I'm not going to talk about pricing on the incentive right now. Come to Monday night session. You'll all be getting an invitation. But there is the Trade Lab. Then there is an RQ membership that gives you ownership of everything that you've seen. Gnostic, the RQ channel, Einstein. If you want to add Einstein, that's an add-on. But the basic membership includes the ownership of the Gnostic levels, the RQ channel. It builds in time of a minimum of 90 days of the Trade Lab, the trading room. We happen to own the tradingroom.com. It is brand new. I might as well show it to you. This is ours and nobody else's. There's only one trading room, the tradingroom.com, and it's ours. And we have just now are launching it. So there's some work to be done. Look at Jack's. Oh, we have some new. Here's members that we want to show trades. And we're going to show winners and losers. But here's Jack S. I know Jack very well. He comes to Coral Gables when we have our professional traders retreat. RiosQuant member Jack from Tarzana traded copper during the London session for profits using the RQ Channel 2 and 7 momentum indicator. Join Jack and the rest of our members in the trading room. Monday, Friday. Experience the power of market intelligence. Here's this trade. If you think that this is the first time seeing this. Here's the announcement of this is me, the old fat guy. No, I'm only kidding. I don't know. I hold myself in higher esteem than that. There's written commentary. Here's a trade from Burbank, California. This person used a 1-minute RQ channel. Made 250. This was my trade. This is a crude oil trade from Wednesday, I believe. Then I did an Einstein trade again. And then this was an invitation. So guys, take the membership trial. You'll get everything you've seen to use. Everything. No obligation. Just fill out the form, the link that Amber gave you, or email her directly. But thank you very much, guys. Enjoy the rest of the day. And I hope next week treats you well. And we'll be looking forward to seeing you in the Trade Lab. or actually Monday night in my session, and then you'll have to request a trial to get, to use the training room. Starts at 8 a.m. I get it going. I'm a moderator. I come in at 9, and I wish you well. Hope to hear from you guys. Take care.